हेलो एवरीवन, वेलकम टू अनदर एपिसोड ऑफ इन कॉन्वर्सेशन बाय एडवाइजर कोच। आज इन कॉन्वर्सेशन में हमारे साथ जुड़े हैं मिस्टर चिन्मय साठे, चीफ इन्वेस्टमेंट ऑफिसर एंड हेड स्पेशलाइज्ड इन्वेस्टमेंट फंड्स विद द वेल्थ कंपनी म्यूचुअल फंड। वेलकम चिन्मय टू इन कॉन्वर्सेशन बाय एडवाइजर कोच।
Thank you so much, Puren.
Our pleasure. Chinmay, before we get into all the exciting questions and answers and our conversation about the specialized investment funds. If you could just take our viewers, briefly about your profile, your investment management journey.
Okay, sure. So, I started my career in investments with UTI Mutual Fund in the year 2004. So, I started my career as an equity research analyst, and I worked there for almost for a period of 3 years, almost 3 years. After that, I worked with DSP Merrill Lynch, so wherein we were managing the proprietary money of Merrill Lynch prop book in India. So that was we were running a long short book there for Merrill Lynch prop, and so that was for a period of another 3 years. From there, for another 3 years, I worked for L&T Mutual Fund in Bombay, where I was looking at a few sectors and also managing smaller funds. And then after that, for the last 14 years, I've been with Bajaj. I was with Bajaj Allianz Life Insurance, working as an analyst and a fund manager, and I was managing some of the largest funds at Bajaj Allianz Life Insurance. And then this opportunity came along. I mean, to start a SIF business, and SIF Circular, as you're aware, came about in February of 25. And
Hmm.
post that, a lot of companies wanted to get enter into it, and so I thought it's a great product to where you are able to express yourself far more better, and
Hmm.
it's something that personally aligns with my thought process of being able to express yourself on both sides. I mean, you always feel as a fund manager on the long side that I mean, this stock should go down, but you're not able to capitulate to or capture it to the extent that is possible. You can be just net zero, and you watch the stock fall. But this is an avenue where you are able to participate in the downfall in a stock, and so that it affects your portfolio positively. And it's one of the it's what it's I mean, as we discussed during the process of this interview, I think you'll realize how excited I am and what are the key positives that this product brings about.
Absolutely. No, SIF definitely, as a product proposition, is catching a lot of popularity. I must say that. And it just opens another gate for an investor to get into more of a regulated environment
Yeah,
in a long short situation where he's willing to take that slight more risk, etc.
yeah.
So tell me something. What excites you the most about specialized investment funds?
See, SIFs fundamentally are very similar to traditional mutual funds.
Uh-huh.
However, SIFs go beyond traditional mutual funds, offering all of their capabilities, so to say, with the added flexibility of active risk management. And this active risk management can be done using derivatives. So,
Hmm.
the key differentiator being the ability to use derivatives not as a tool to increase the risk or take excess risk, but as a mechanism to actively manage and calibrate the risk taking abilities that you may have. So, when these instruments are used correctly and accurately, I think they allow the fund manager to control exposure, hedge effectively, and navigate market conditions with far greater precision, so to say, than a typical long only approach. So that's so risk and risk management, I think, are the key focal areas over which SIFs are built.
Could you give some examples for us to understand this better?
So for example, I mean, so let's say you're running a long only fund,
Hmm.
and and you expect that the market is peaked out typically, and there is not much you can do. I mean, you can create some cash, but you cannot benefit from any kind of a down cycle in the markets overall. So the reasons for that could be earnings getting downgraded because the
Hmm.
economy is not doing well. It could be a function of overvaluation. So that's on the market side or specific stock specific side, and you cannot benefit to the extent that you should. So that's point number one. And by using derivatives on the short side, and I'm talking of using derivatives for shorting per se. So these kinds of advantages can be used up, and your portfolio can be aligned in such a way that your risk adjusted return is superior to a long only fund. So imagine a situation wherein there is an unknown.
Mm.
So wherein you don't know what's going to happen. Let's say, let's take the war situation currently. I mean, it's in an unknown kind of a territory.
Completely.
So you may have an opinion, but it may or may not be accurate
True.
about the about where the market is going. Let's say the intensity of the war increases, your overall portfolio will be taking a hit on the long side if you're running a long only fund. Whereas if you're running a long short fund, let's say you're running an 80-20 kind of a fund wherein 80% is long and 20% is short. So that 20%, these ideas were meant to be alpha generating ideas. They were not meant to hedge.
Sure.
But so they were supposed to deliver returns on their own. When these stocks actually go down, you actually benefit from them, and hence they were supposed to deliver higher returns than the market, and hence they are a part of your portfolio. But when an unknown kind of a situation hits you, we observe that these kinds of positions help you as a natural hedge to the long only portfolio as well. So they will
Okay.
also fall more than what they were supposed to fall because the markets have changed. So in the process of alpha, so our idea about using these kinds of short positions is to maximize alpha. But in that alpha maximization process, they provide a natural hedge to the long only portfolio. And
Hmm.
hence the overall unknown risk goes down substantially. So that's the first point on why long short funds are can be potentially better than long only funds. That's point number one. Second thing is with respect to known unknowns. So
Mm.
when you know something is going to happen, how can you hedge your portfolio against it?
Mm.
So that can be done using derivatives again. So
Mm.
if it's going to affect your entire portfolio as a whole, some event that is very known, which is so to say calendarized. Okay. So towards that event, you can protect your portfolio using derivatives in using index futures. Or if it's going to affect a certain sector, you can use derivatives in that particular sector or those particular stocks so
Mm.
that your risk go down because of an impending event.
Sure.
So that's the way that you can use derivatives typically to maximize alpha while hedging your portfolio also automatically.
Sure. Just one question, very curious to ask, is that what are the chances for these bets going wrong as well?
So bets will keep going wrong.
Mm.
And I mean, I would be a fool to say that bets would not go wrong.
Mm.
So
Mm.
the idea and the bets going wrong on the short side are something that people are worried about, but the
Mm.
bets going wrong on the long side are also substantially similar, substantially important. And we've seen funds and fund managers underperform. And even though, so let's take a situation wherein a stock has delivered 3% return in a year's time. During this entire time, the market would have gone up by 15%. So the stock is underperformed by 12%. So there is a value destruction
That's
by
true.
owning that stock. So even though it doesn't appear to be, but it is destroying value. Why it is destroying value is because you're taking a risk in allocating assets to that stock, and those assets are not delivering the returns they are supposed to be, and that
True.
is the problem. So on the short side also what I am thinking is particularly on the whichever direction you are thinking about, the returns per unit risk that you're taking have to be higher.
Yeah.
And every risk, so if you're taking a higher risk, you should be compensated higher. If you're taking lower risk knowingly, you may expect to be compensated lower, and that's fine with it because that's the decision that you're taking. So in SIFs, you can map out the risk level that you want to have in your portfolio at every point in time, and that can be as little as zero to the long only kind of a portfolio risk.
Sure.
And that calibration is possible using derivatives, and that's the best part about SIs.
Sure. Sure. Interesting. Very interesting. Chinmay, Wealth Company Mutual Fund is launching their new fund offer on 15th of April for two funds together.
Yeah.
WSIF, long only long short fund, which is the WSIF equity long short fund,
Yeah.
and the other one is WSIF equity X top 100
Extra.
long short
Yeah.
fund. Correct. So
Yeah.
these are two funds. One is long short and one is X top 100. So
Yeah.
could you take our viewers in detail about both these funds? And
Yeah.
since these are the first SIF funds being launched by the Wealth Company Mutual Fund, How come the thought came to launch two funds together?
Yeah, yeah. No, so we are launching these two funds with a similar investment philosophy, but different kinds of portfolio construction process. So just to talk about the let me first talk about the portfolio construction process.
Yeah.
So we are of the strong belief that money can be made if you are able to identify mega trends, and we are of the strong belief that mega trends originate in early stage companies. They get validated in private or unlisted markets, and then they tend to deliver the strongest risk adjusted returns when they get listed in the as a potential multi-bagger.
Hmm.
And
Hmm.
as these businesses mature, they can eventually evolve into large cap sector leaders. But during this entire journey from being listed as mid and small caps towards becoming a large cap, they deliver superior risk adjusted returns. And our idea is to identify these kinds of sectors. So whether they are related to electric vehicles or renewables or financial tech or ed tech, machine learning, AI. I mean, we have seen some companies getting listed already, and we'll see a flurry of IPOs for the foreseeable future, and we'll see a lot of these exciting companies get listed. And we want to position ourselves to be able to identify these kinds of companies and opportunities. And we are aligned with the structural shift that we are seeing in the marketplace as a whole. So the idea is, in both the funds, the idea is to identify these potential multi-baggers and potential compounders, wherein we are able to make a lot of money for our investors on the long side particularly.
Sure.
So when we are talking about multi-baggers and potential multi-baggers and compounders, they will form a substantial portion in the X top 100 fund, because they
Hmm.
will be a part of those small and mid cap universe. So when we talk
Absolutely
about
correct.
X top 100, that is the typical mid and small cap universe.
True.
And a lot of these companies, these exciting companies, will be a part of our portfolio.
Hmm.
On the long one, on the equity long short fund, that's the flexi cap fund. It's like
Hmm.
a flexi cap plus kind of a fund wherein you can invest across market sectors, across market caps rather. And our idea would be to be slightly more oriented large cap in that, because we want to be true to the nature of the fund. And on the mid and small cap also, we want to be pure in the sense that we want to be focusing to a large extent on mid and small cap. So that's how we are looking at it. And mid and small cap, which is the X top 100 fund, I mean, that category itself does not exist in mutual funds at this point in time.
Hmm.
It's a
Hmm.
new category that has been created by SEBI
Hmm.
automatically.
X
And
top 100.
hence X top 100. And hence, that's also quite exciting. And we are quite hopeful that our funds deliver, and they're able to, I mean, from a risk adjusted return basis, we are able to deliver good returns going forward.
Sure, sure. So basically, आप कह रहे हैं कि one fund, of course, which is the WSIF equity long short, is more flexi in nature, more large cap tilted,
Ji.
and X top 100 is more mid and small cap, as a mix. Of course, there will be large cap as well, but more mid and small cap. So it's completely different when presented to an investor from a risk return perspective as well.
Yeah, yeah. So
So,
so typically we've seen that the mid and small cap category delivers higher returns. I mean, over the last 2 decades, if you look at the data, and so mid and small put together, that is. And
sure,
we've seen that these companies typically, I mean, once a company gets into the mid and small cap category, a lot of the risks that typically are associated with microcaps gets taken care of. I mean, these companies arrive at they are achieve a certain size in sales, and there is a certain professionalism in the management level. The debt levels are generally lower. I mean, I'm talking about a very generalistic idea. It's not specific, but that's what we have observed, and they are apt for a very strong growth path, so to say.
sure.
And that's why the money making ability, and that's why we've seen these companies deliver better returns also on the stock prices for shareholders. So it's quite exciting. And so yeah, I mean, that's going to be our philosophy.
So Chinmay, approximately how many stocks would you bundle up in both these portfolios separately?
So I'm of the opinion that anything less than 30 is not a good number to have
Acha,
in
acha.
any kind of a fund. So
Ah,
typically it will be a number higher than 30,
okay,
and a number above 60, 65, it becomes difficult to manage the portfolio effectively. So somewhere in that range is an optimal number, and depending on market conditions and our conviction levels in those particular stocks. So, it will be a function of the number remaining between the two
Sure.
bounds that I mentioned.
Naturally, so the long shot probably will have more 30-ish or 30 to 40, and the X top 100 might have slightly a longer tail, could be.
Yeah, yeah, yeah,
So,
yeah, yeah.
given the
That's right.
nature, given the nature
Yes,
of the funds.
yes,
Sure.
yes.
Uh, in the normal and stressed market situations, how much hedging do you propose, in both these separate funds?
So I'll give you some data points. So we have looked at data since 2012, and we've covered over a million data points, which is across 3,500 days multiplied by 316 companies and one index. And we have looked at the daily returns and how many stocks outperform the benchmark on a daily basis.
Hmm.
And
Hmm.
you'll be shocked to know that the number is 46%. So more stocks underperform the benchmark on a daily basis, and and less stocks outperform the benchmark on a daily basis. That's point number one. The second data point is how many stocks out are deliver more than 0% return or are positive on a daily basis. So that number on an average is 46%, of is 49%. So more stocks end up being red on any given day than the number of stocks that are positive. Now, why these two data points are important is because they tell you that there are always monies to be made on the short side. तो ऐसा
Hmm.
जरूरी नहीं है कि हम सिर्फ लॉन्ग ओनली में ही पैसा बना सकते हैं. सो इतने सारे डेटा पॉइंट्स है. आप जिस तरीके से डेटा देखना चाहते हैं
Hmm.
उससे आपको पता चलेगा कि दोनों तरफ से पैसा बनना चाहिए. एंड उस प्रोसेस में क्या हो जाता है कि जहां भी ओवर वैल्यूएशन है, व्हेन आई से ओवर वैल्यूएशन, वो नीड नॉट बी कि पी या ईवी बिटा या कोई भी वो कॉमन मेट्रिक नहीं है. आई एम सेइंग कि ओवर वैल्यूएशन इन न इनहेरेंट वे और इंट्रिंसिक वे. कोई स्टॉक ओवर वैल्यूड है तो उसमें हमें अवॉइड करने से ज्यादा है कि हम उसमें पैसा कैसे बना सकते हैं
बना
बाय,
सके। Hmm.
तो उसके ऊपर ज्यादा फोकस रहेगा. एंड हेजिंग की जो आप बात करते हैं एट एनी पॉइंट इन टाइम, सो द डेटा पॉइंट्स दैट आई मेंशन वाज अ फंक्शन ऑफ द आंसर दैट आई वांट टू गिव यू. दैट hedging should be natural and it should be on a regular basis. So hedging with the idea of identifying those kind of opportunities which are likely to go down, and there are a lot of ideas which will always be there which are going down where you can identify. So उससे हमें क्या फायदा हो सकता है एंड वो हमें लॉन्ग ओनली पोर्टफोलियो को कैसे हेज करके दे सकते हैं उसके ऊपर हमारा ज्यादा ध्यान रहे.
तो शॉर्ट पोजीशंस कितना ले सकते हैं आप एसआईएफ्स में?
मैक्सिमम अप टू 25% ऑफ द
ट्वेंटी
yield.
फाइव परसेंट सो ये जो 25% है, मतलब कि would you keep the range very static, or would you keep moving depending upon the various market levels you see? Because आपने एक पॉइंट तो बहुत अच्छा बोला कि yes, while लॉन्ग ओनली से पैसा जरूर बनेगा, बट शॉर्ट पोजीशन से भी पैसा बनता है. एंड जो आपने
जी,
मार्केट का data statistics दिया, of course that shows it completely. So
जी,
how do you plan to do that in the portfolio, or are you looking at certain situations arriving and then only taking those short positions
जी. सी
in both
हम
the
अगर
funds?
जी, जी, हम अगर लॉन्ग और शॉर्ट की बात करते हैं तो उसके पीछे कोई भी एक डिसीजन जब हम लेते हैं,
Hmm.
उसके पीछे एक डिटेल्ड इन्वेस्टमेंट हाइपोथेसिस बनता है कि ये स्टॉक हम इधर लॉन्ग कर रहे हैं या शॉर्ट कर रहे हैं, जो भी, या बिल्कुल अवॉइड कर रहे हैं. उसका क्या एक इन्वेस्टमेंट हाइपोथेसिस है कि ये स्टॉक मुझे कितना रिटर्न देगा, कितने समय में देगा, इसका क्या काम है, ये स्टॉक का स्टाइल फैक्टर क्या है, ये स्टॉक मेरे पोर्टफोलियो में कितनी वॉलेटिलिटी ऐड करता है,
Hmm.
एंड इज द रिटर्न दैट आई एम एक्सपेक्टिंग गोइंग टू बी हायर देन द रिस्क दैट आई एम टेकिंग. ये सारी चीजें जो मैंने अभी कही है ये एक क्वांटिटेटिव अप्रोच से हम देखते हैं.
Sure.
एंड इससे हमें एक आंसर आता है कि is this the right stock to buy or sell even at this point
Hmm.
in time, so that my returns that I'm expecting on an annualized basis are higher than the volatility or any kind of a drawdown or any kind of a permanent loss of capital that I'm expecting. And if it is suiting the criteria that stock will be a part of our portfolio, whether it is long or short, it does not matter. Uh, that idea will be a part of the portfolio, I would say. I mean, let's look at it from that perspective. हम चाहते हैं कि हमारी पोर्टफोलियो की वॉलेटिलिटी में हम मिनिमाइज करें, एंड जितने जितने भी रिस्क के एलिमेंट्स होते हैं, हिडन वेरिएबल्स रहते हैं. जैसे जैसे मैं कहूँ कि एक मोमेंटम हो गया. सो कितना पोर्टफोलियो मेरा मोमेंटम ड्रिवन है, कितना पोर्टफोलियो मेरा वैल्यू ड्रिवन है, कितना कॉन्ट्रा है, कितना क्वालिटी है, ओके, कितना ग्रोथ है. तो इसमें कोई भी एक फैक्टर में अगर मेरा एक्सेसिव कंसंट्रेशन हो जाता है, then my portfolio is exposed to that particular style factor. So am I looking at that as a risk element and am I able to identify कि बहुत ज़्यादा वैल्यू driven portfolio बन चुका है. Let's say 70% of my portfolio is value. I mean, I'll be very scared of that because if value does not work, if momentum were to come back and return in the markets, my portfolio will underperform. So the idea is to understand कि आप कितना value लेना चाहते हैं at any point in time. Have a quantitative and a data approach towards it. Understand what you're doing, and that's the part of the investment hypothesis. So वो एक detailed investment hypothesis का एक part होगा कि हम long करना चाहते हैं, short करना चाहते हैं, avoid करना चाहते हैं, and इसका purpose क्या है, and ये हमारे portfolio को कैसे affect करता है. So
Sure.
that's the investment philosophy or the investment process that we'll be following.
Sure. Chinmay, we are going through a very interesting market cycles right now, correct? And none in our control. Let me put it this way. ठीक है. तो इस तरह की situation में, let's say if this continues, for a couple of months more, then what would be your strategy, towards this the hedging or the short positions, etc. This is more of a academic question rather than what you would actually do. It's more of an academic question for our viewers to understand that better, because it's a perfect market scenario what we're going through. कि रोज हमारा Nifty and Sensex is going down by about 1.5%, and suddenly it goes up, suddenly it goes down.
जी, so एक जनरल कोर्स ऑफ बिजनेस में अगर हम एक ओवर द नेक्स्ट लेट्स से 20 इयर्स का डेटा देखते हैं एंड हम देखते हैं कि हमारे पोर्टफोलियो में लॉन्ग कितने टाइम था और व्हाट वाज द प्रोपोर्शन ऑफ लॉन्ग्स एंड हाउ मच वाज द प्रोपोर्शन ऑफ शॉर्ट्स एंड उसको आपने सॉर्ट कर दिया उस डेटा को पूरे इन असेंडिंग ऑर्डर we would expect the median to be somewhere around 85-15 या 80-20 somewhere in that range. So that would be the situation even today in the portfolio because that's something because we don't know. I mean, कल वॉर रुक सकता है, राइट? आई मीन और कल वॉर एक्सकेलेट भी हो सकता है, एस्केलेट भी हो
बिल्कुल
सकता है.
सही. या
सो हमें हमें वो व्यू नहीं है आज की तारीख में. हमें क्या देखना है कि हमें कौन से स्टॉक्स पसंद है एंड हमें कौन से स्टॉक्स पसंद नहीं है. एज लॉन्ग एज जो पसंद नहीं है स्टॉक्स वो ज्यादा गिरेंगे देन व्हाट द मार्केट विल गो अप, okay, or the market will fall down, उससे ज्यादा गिरेंगे, we will be having those kinds of positions as our short positions. And just to give you a very quantitative number, अगर एक स्टॉक हमें लगता है कि 8% से गिर सकता है एक साल में based on our own internal estimates and target prices etc, and the market is expected to go up 15%, so then effectively by shorting this stock I'm going to underperform the market by 7% because the stock is down 8 whereas the market is up 15, so there is an underperformance of 7%. So this stock will not be, or this idea will not be a part of our portfolio. But कोई स्टॉक है जो हमें लगता है कि 25% यहाँ से गिरना चाहिए because of earnings cut, because of something that has happened, and then yes, then that will be a short idea at that point in time, and that will be a part of that 85-15 or 80-20 portfolio that I talked about, wherein it will be a part of that 15 or 20% of the stocks which will be short at any point in time.
True, true, true. So today, through this in conversation, Chinmay, what message would you like to give to all the viewers listening to our podcast? Primarily the mutual fund distributors, advisors, and investors about specialized investment funds as a category, and then of course your two new fund offers as well.
Definitely. I mean, see, look, so it's an exciting product, and so it's like something that a mutual fund can do and more. That's how we are looking at it. Derivatives and focus on short side. I mean, wherever I've been meeting distributors, most of the questions have been around derivatives and the risks in derivatives. But there is one clear, I mean, there is a distinction between how derivatives can be used as a risk management tool versus derivatives can be used as speculation. Now, risk in derivatives generally or typically arises from the use of leverage. जब आपके पास है 100 रुपए and you are taking an exposure of 1000 रुपए, that's what I'm talking about, leverage. Now, whether you're taking it knowingly or unknowingly is a different angle. But under the regulatory framework for SIFs, leverage is not permitted, and hence the primary source of risk that is associated with derivatives is structurally controlled. So derivatives से पैसे खोने का चांसेस तो है, लेकिन लेवरेज के थ्रू पैसे काफी ज्यादा खोने का चांसेस जो रिस्क लेके आता है वो नहीं है.
Hmm.
So that's the beauty of the SIF product, that there is
Yeah.
zero leverage,
Hmm.
and and derivatives can be used. And so look at SIFs as a product and try to understand the product in detail. And in my opinion, it should be the core part of any portfolio, whether it is on the equity side or whether it is on the hybrid side. So an SIF has to be the core part of your portfolio, and there could be satellite mutual fund schemes, which are specific schemes, whether it is a focus fund or a small cap fund, or any kind of a thematic fund that can be a part as a satellite. But the core has to be an SIF, and that's what my personal belief is, and that's the view that I would like you to share with your distributors.
Sure, sure. Now tell me, what typical, investment horizon would you give, as a guidance for an investor coming in SIF funds? Let's say, आपका एग्जांपल ले लेते हैं दोनों फंड्स का, जो न्यू फंड ऑफर लेके आ रहे हैं, कितना टिपिकली रहना चाहिए इन्वेस्टमेंट्स?
जी, मिनिमम इट हैज टू बी एटलीस्ट अ साइकिल. सो क्या है ना कि हमें हमें एसआईएफ को ऐसे देखना चाहिए कि एसआईएफ विल पार्टिसिपेट ऑन द अपसाइड
हम्म.
to some extent, or let's say majorly. They will avoid the downside. Again, participate when the cycle upturns, and again avoid downsides. And again, when I say avoid downsides, not completely, but to a large extent.
हम्म.
And in this process, क्या होता है कि आपका जो NAV है, वो typically एक long only fund से ज़्यादा होना चाहिए. So you have to capture a few cycles, a couple of cycles, or at least one cycle to realize the benefit of a SIF in participating in both the cycle, in both upside as well as downside. And that's
Yes.
where the time horizon की जो आप बात करते हो वो 5 से 7 साल मिनिमम होना चाहिए, बिकॉज उसमें फिर आपको जो बेनिफिट दिखेगा ना वो ज्यादा दिखेगा rather than a very short period of time like 3 months 6 months wherein markets can be odd, and they may not be suitable to the style of the fund that is being run, etc. So ideally speaking, it has to be as long as possible, and think of it not as a speculative investment portfolio, but it's more of a structural investment portfolio for a longer period of time.
Wonderful. No, very well explained. Very well explained. So, well, for our viewers, this is Mr. Chinmay Sathe, Chief Investment Officer and Head Specialized Investment Funds with the Wealth Company Mutual Fund. Wealth Company Mutual Fund is launching their two new fund offers of specialized investment funds from 15th of April 2026. One fund is called as the WSIF Equity Long Short Fund. The other fund is called as the WSIF Equity X Top 100 Long Short Fund. So both these new fund offers are starting on 15th of April 2026. Chinmay, I think we went beyond the boundaries and asking you the questions. Thank you very much for your patient answering, because these are new categories, and as we all know that everybody's learning about it at this
Okay.
point of time, because till now derivatives, etc., was a no-go. But people didn't know how you can utilize derivatives also to, earn and of course hedge your portfolio as well at the same point of time. So thank you very much for taking us through a very detailed uh, you know uh, pitch in terms of what SIFs are all about, and of course these two wonderful new fund offerings which you're coming up with. Thank you so much for your time,
Thank you.
Chinmay, and all
Thank
the
you.
best
Thank
for
you
the
so
new
much.
fund offers.
Thank you so much. Thank you.
Thank you. Thank you.